Hi, welcome back to my channel. Today we're going to be talking about two potential options that I'm looking at adding to my portfolio, as well as how my portfolio did on the week and a couple of holdings that I have. We can see on the day up about 0.5% or about $178. Total portfolio value is now $33,600. Over the past week, it's been terrible, down 7.55% or about $2,700. Now, when we zoom out to the month, we can see I'm still up about 10%. So there is a little bit of a retraction over the past month. But of course, if you could get a 10% monthly return all the time, that would be just insane. For the past 3 months now, up about 62% or $12,800. Over the past year, rather, up 172% or $21,273, and all-time now up 155% or just over $20,000. Now, when we look at this graph, we can see that is a really large retraction here from the peak in the beginning of March when it was about $37,000, $38,000. But the vast majority of this movement has to do with Bitcoin, and we'll talk about my plans for Bitcoin here at the end of the video. But first, my total portfolio investment is now $13,200. I did deposit an additional $200 last week, and I made a couple of moves with that investment. First move was to buy one more share of VTI, which is the larger individual of my two ETFs. Price there was $205 even. I now have 7 shares there. Next, I purchased $25 more Ethereum. My position purchase there was 0.0137 at a price of $18.1612. I now own about 23% of one Ether. Last but certainly not least, I purchased $50 more Bitcoin. The quantity there was 0.00085. The price was $58,882. My new total for Bitcoin is 0.5183. Real quick, don't forget to subscribe to the channel. I'm up to 199 subscribers and I need your help to get to that 200 subscriber milestone. The first of the two stocks that I'm looking at purchasing is an extremely risky and extremely questionable stock. So here we have Philip Morris. If that's a name that doesn't ring a bell to you, they're the largest tobacco producer in the world. Most notably, they're known for selling cigarettes. So over the past year, we can see they have about a 34% return. Now that doesn't seem great compared to the market, but their dividend yield is over 5%, and that's actually a little bit lower than it's been. When we look at the price to earnings ratio, it's only about 17, which is significantly below the 22 that the S&P 500 is at right now. The reason this is interesting is on the day, there's a little bit of movement. On the week, it's down. Month, it's up a little bit. 3 months, up about 7%. Over the past year, up 34, as I mentioned. But where it gets really interesting is that over the past 5 years, it is down about 10%. For a long time, these sin stocks, as they're known, have performed very well. The question is this 5-year blip for Philip Morris a sign for something in the future, or is it something that they can get turned around? The reason that I find this so interesting is that these companies always seem to find the next product. And it really becomes a moral question of, are you okay with purchasing a stock like this that you know is doing bad? It's a toss-up, but I think it's definitely worth discussing. So let me know what you think down in the comments about Philip Morris or these tobacco companies in general. But we can see the analyst ratings, 65% buy rating, 35% hold rating. We can see their earnings are massive, about $1.50 a share, and very consistent. Especially when you combine it with that 5% dividend yield, I think it's definitely worth continuing to watch. The second of those two stocks I'm looking at is going to be Plug Power. This is a hydrogen fuel cell company. For those who are not aware, this is basically a new technology, the goal being to create almost larger battery packs using hydrogen fuel cells. Plug Power has been around actually for about 20 years. Their big issue has been trying to become profitable. So if we go down and look at their earnings, we can see that it's trending upwards. So even if we look at Q2 of 2019, it was in negative, trending upwards. Q1 of 2020 was very bad, but things are looking very good. When we look at the stock price, actually, we can see how crazy this movement's been. So trading for about $34 right now. Over the past week, down a little bit. Past month, down 26%. 3 months, down 9%. Past year, up 770%. And 5 years now, up about 1,500%. So the reason I like this one There's really twofold. Number one, this could be a huge asset for the future, and I think that the potential is really untapped right now, and it's limitless. At the same time, there's been a huge sell-off of Plug Power and a lot of hydrogen and fuel cell companies, even though it still has those solid earnings reports and an 80% buy rating on Robinhood. So we can see here in February, it peaked at about $65, $70, which is just crazy. And so it's basically half of where it was. The other reason I want to mention this one is that we go down and look at the history. I owned a few shares of this. So I sold 7 shares of Plug Power at $2.32 a share back in mid-2019. Those 7 shares would be worth a couple $100 at this point. Not a ton of money, but still frustrating that I did sell. Without further ado, we will get into the stocks I actually own in the portfolio, but let me know what you think about Plug Power or hydrogen fuel cell companies in general. First stock we're going to talk about today is actually an ETF. It is SPHD, or the PowerShares S&P 500 High Dividend Low Volatility ETF. For those who have watched this channel for a little bit, you would know I own 45 shares of this, by far the largest stock holding in the portfolio. I really like the monthly dividend here. I like the slow, consistent growth. We can see my total return is now up about $236 or 14%. And of course, that does not include my dividends. Market value is about $1,900. Over the past week, we can see it's pretty flat. Past month up 7%, which is very good. 3 months up about 13, up 45% over the past year, and 5 years now only up about 15%. But again, very strong dividend here. We can see I have a pending dividend coming up March 31st of $6.35. The thing I want to point out here, the dividend yield is 4.83%, which is very good. So even with that large drop off from last year, you're looking at 15% growth over the past 5 years combined with a 5% annual dividend. So it's been a very solid, very consistent performer in my portfolio. Next up, we have Realty Income, which is the larger of the two REITs in my portfolio. Realty Income trades as O. Total market value here is $1,091.23. My average cost is down at $59.01. Makes up about 3% of my portfolio with those 17 shares. This one also pays a monthly dividend. The goal here is to purchase at least one more share of this every single month. I'm pretty happy with the results, to be honest. So we can see my total return is up about 9% or $88 on this all time. Over the past week, it's up. Month, it's up. 3 months, up about 5%. Over the past year, it's now up 14%. When we zoom out to 5 years, we can see that just like many other REITs, Realty Income did get hit extremely hard. That being said, I'm pretty happy with the performance here. And again, trying to diversify the portfolio, make things a little bit less risky because of how much crypto I do own. Sony has largely been a forgotten stock in my portfolio. I've been trying to talk about this one a little bit more lately, and I'm definitely going to be purchasing at least one more share of Sony here in the next month. So it's now trading for $103. My average cost is down there at $56. So we can see the total return is up 84%, which is just crazy. Only makes up about 0.5% of my portfolio, but I wish I could go back in time and buy more. Over the past week, it is down about 3%. Past month, down about 3%. 3 months, up 4.5%. Past year, up 75%, and 5 years now up 289%. Not a whole lot to say here. Sony has just been making things happen. We can see their earnings reports are looking pretty solid. There's a lot of reasons to like Sony. The dividend is extremely small here, but over the past 5 years, very good, very consistent growth. Keeping on this theme of cryptocurrency, the last stock we're going to talk about today is going to be Riot Blockchain. My total return is now down about 7.43%, which is a little bit frustrating to see. That being said, this one is going to be extremely risky, which is another reason why I want to try to diversify the portfolio more. I've read some articles saying that these Bitcoin and cryptocurrency mining companies could actually have larger returns over the next year or two than those cryptocurrencies themselves, because the earnings for these companies largely revolves around the prices of the cryptocurrencies. So we can see extremely poor performance earnings-wise over the past 5 of the 6 quarters, but then Q3 of 2020, they were able to get things turned around, and Bitcoin, of course, and all of the other cryptocurrencies have continued to perform super well. So this next earnings call on April 5th will be very interesting to see what that does to the price. I'm not sure if I want to sit on this or buy more shares. Over the past month, we can see it's up a lot. 3 months up even more, past year up 5,700%, and 5 years now up 1,800%. So not quite as big of the returns as we're seeing on things like Bitcoin, but this one's all over the place, and I definitely think it's worth continuing to watch. Last of all, just like all my videos, we're going to talk about Bitcoin, now trading at $52,815. Total return here is now about 16,000 or 142%, which sounds incredibly high, and I should be super happy about that, but that is down considerably over the past week. You can see over the past week now, down about 8.5% or $4,900. Considering I do own just over half of Bitcoin, that means I am down about $2,500 on Bitcoin over the past week. But my personal belief is that Bitcoin will continue to outperform the market until mid-November to December of this year. The goal is to purchase as much Bitcoin as I can until then, utilize margins with the stocks that I'm buying so that I can buy more Bitcoin, and hopefully hold on to this and be able to sell it at the end of the year for a lot of money. If we zoom out, we can see over the past month now, about 12.5%, 3 months up 113%, past year now up almost 700%, and 5 years now up $12,750. It is extremely risky, but that is the decision that I've made. That's going to be it for this week's video. Thanks, and I'll be back with another one next week.